Hello, friends. Today about something that concerns every person who receives Social Security. Most people assume their monthly check is calculated correctly, and there is nothing they can do to change it. That assumption is costing a lot of people real money every single month. There are specific situations and specific documents that can increase your Social Security benefit. Some apply to people who are already receiving payments. Some apply to people who haven't claimed yet. And in almost every case, the SSA does not notify you when money is being left on the table. You have to know where to look. Today, I'm going through 5 of these situations, explaining exactly what to check and giving you the specific steps to take. Watch until the end because I'll give you a full checklist. Before we get into it, subscribe to this channel right now and turn on the bell. The rules around Social Security change every year, and when they change, SSA does not call you to explain. The people subscribed here find out before the money slips away. Subscribe now, and let's get into it. Before I get into each situation, let me quickly explain how SSA calculates your benefit, because once you understand this, everything else makes sense. Your Social Security retirement benefit is based on your 35 highest earning years of your working life, adjusted for inflation. SSA takes those 35 years, calculates an average monthly income, and uses that number to determine your check. If you worked fewer than 35 years, the missing years are filled in with zeros, and zeros pull that average down significantly. One missing year of earnings, a year that should be there but isn't, reduces your monthly benefit by approximately $100 according to SSA. That is $1,200 per year. Over 20 years of retirement, one missing year costs you $24,000. If your record has 2 or 3 problem years, the cumulative loss multiplies. Now, let's go through the 5 situations where this most commonly happens. Situation number 1, errors from the 1980s and 1990s. This is the most widespread problem, and it affects the largest number of people currently receiving Social Security. During those decades, payroll processing was handled manually. Employers submitted paper forms to the IRS, which transmitted the data to SSA. At every step of that chain, errors occurred. Numbers were transposed, names were misspelled, entire years were missed because a form was lost or misfiled. The further back in time you go, the harder it was to catch and fix these errors, and many of them were never caught. If you worked during the 1980s or 1990s, open your Social Security statement at ssa.gov and look at every single year. Compare what the statement shows against whatever records you have: W-2 forms, old tax returns, pay stubs.
Look specifically for years where the amount is significantly lower than what you remember earning, and for years that show 0, even though you were working. Either of those is a potential error worth correcting. To request a correction, you file Form SSA 708, the Request for Correction of Earnings Record. It is available free at ssa.gov. You attach your supporting documentation, the W-2 or tax return that shows the correct amount, and submit it to your local SSA office. Processing takes 10 to 90 days. When the correction is made, SSA recalculates your benefit and your monthly check increases permanently going forward. Situation number 2. Women who left the workforce to raise children. This is the group most consistently and most significantly affected by the 0-year problem, and most of them have no idea. When a woman leaves her job to raise children, whether for 2 years or 12, those years produce no earnings in her Social Security record. If she had fewer than 35 working years before claiming, each year away from work is a 0, being averaged into her benefit calculation. A woman who worked 25 years and raised children for 10 years has 10 zeros in her record, pulling her average monthly benefit down significantly compared to someone with 35 years of continuous work history. There are 2 things worth knowing here. First, if you return to work at any point after raising children, and your earnings in those later years are higher than your earlier ones, the stronger years replace the weaker years in SSA's top 35 calculation. Your benefit should reflect that. Second, and this is what most people miss, if you are currently receiving Social Security and you are still working part-time, SSA reviews your record every year and automatically recalculates your benefit if your new earnings would increase it. paying the increase retroactively to January of that year. If you have been working part-time and haven't seen your benefit go up, it is worth calling SSA at 1-807-72-1213 to ask whether your recent earnings have been reviewed and whether a recalculation is pending. Situation number 3. People who worked for themselves, freelancers, contractors, small business owners, gig workers. This group has a specific and common earnings record problem that most of them don't know about. When you work for an employer, they handle the payroll reporting to the IRS and SSA. When you work for yourself, you are responsible for paying self-employment tax and reporting your income. And historically, a significant number of self-employed people either underreported their income, reported it incorrectly on their schedule, or in some years, didn't file at all. The result: years where your actual earnings were substantial, but your Social Security record shows a fraction of what you really made, or nothing.
If you had any years of self-employment, particularly in the 1980s, 1990s, or early 2000s, pull up your earnings statement at ssa.gov and compare it against your old tax returns for those years. Specifically, compare what your schedule reported as net self-employment income against what SSA shows for those years. If the numbers don't match, that is a correctable error. The same form SSA 708 applies. You attach the relevant tax documents as proof and submit the correction. One important note: in 2026, the self-employment tax threshold that triggers Social Security credits is $1,890 in net earnings. You earn one Social Security credit for each $1,890 of earnings, up to a maximum of 4 credits per year. If you are currently doing any gig work, driving for rideshare, delivery, freelancing, make sure you are filing Schedule C each year and paying self-employment tax. Every year you skip that filing is a year of zeros in your earnings record. Situation number 4. People who are still working after claiming Social Security. This is one of the most consistently overlooked opportunities for people who are already receiving benefits. If you claim Social Security and are still working, whether full-time, part-time, or seasonally, your earnings continue to be recorded in your SSA record. And every year, SSA reviews those records and compares your new earnings to your existing top 35 years. If the new year is stronger than your lowest year on record, the weaker year drops off and your benefit is recalculated upward. SSA is supposed to do this automatically and pay any increase retroactive to January of the year following when the earnings were reported. The problem is that this automatic recalculation doesn't always happen on schedule, and many people who are entitled to an increase don't see it reflected in their check. If you have worked in the past year or two since claiming and your check has not gone up, it is worth logging into your My Social Security account and checking whether your most recent earnings are appearing in your record. If they are there and your check hasn't changed, call SSA and ask specifically whether a recalculation has been completed for those earnings. If your most recent year is not appearing in your record at all, that is a reporting gap worth following up on. Situation number 5. Veterans who served between 1957 and 2001. This one applies to a smaller group, but the impact can be meaningful. Veterans who served on active duty during this specific period are entitled to what SSA calls military service wage credits, additional amounts added to their earnings record for years of service. The credits work differently depending on the period of service, but for most veterans who served between 1978 and 2001, SSA adds an extra $100 in credited earnings for every $300 earned in active duty pay, up to $1,200 per year. For service between 1957 and 1977, the credit is a flat $300 per quarter of active duty. Most veterans who served during this period have never checked whether these credits appear correctly in their earnings record. If you are a veteran and you served during these years, log into ssa.gov, open your earnings statement, and look at the years of your service. If the amounts look low given what you were paid in active duty, contact SSA directly and ask specifically about military service wage credits for your years of service. So here is the checklist of what to do today. Go to ssa.gov and log into your My Social Security account. Open your Social Security statement and review your earnings history year by year. Look for any year that shows zero earnings when you are working, and any year where the amount seems significantly lower than what you remember earning. Compare the problem years against any records you have: W-2 forms, old tax returns, pay stubs. If you find a discrepancy, download Form SSA 708 from ssa.gov, attach your documentation, and submit the correction. If you are currently working and haven't seen your benefit increase in the past year, call SSA at 1-800-772-1213 and ask whether your most recent earnings have triggered a recalculation. And if you are a veteran who served between 1957 and 2001, ask SSA specifically about military service wage credits. Your Social Security check is built on a record that was assembled over decades from data submitted by dozens of employers and sometimes manually entered by human beings. Errors happen, missing years happen, and every one of them is worth finding and fixing because the correction is permanent. Subscribe. Share this with someone you know who receives Social Security.